Warren Buffett's 2026 portfolio just dropped $263 billion, 29 holdings filed with the SEC on May 15th. And most people are going to spend the next 3 hours trying to piece it together from raw government documents. We pulled the entire Berkshire Hathaway 13F in about 10 seconds. I'm going to walk you through exactly what he's holding, and then run his top positions through invyra's valuation framework to see if the numbers still hold up. Let's go! This is invyra's Investor Elite Tracker. Every quarter, institutional investors file what's called a 13F, a full disclosure of their holdings directly with the SEC. Invyra pulls that data and builds a clean profile for every major investor on the platform. No Edgar, no copy-pasting. Just the portfolio, structured and ready to analyze. Berkshire Hathaway filed May 15th, 2026. Total value, $263.1 billion, 29 positions. And here's the first thing that stands out. 90.7% of this entire $263 billion portfolio sits in just 10 stocks. That's not an accident. That's a philosophy. Now, let's look at what those 10 actually are. Most people assume this is an Apple portfolio, and Apple is number one, $57.8 billion, 21.99% of the total. But look at what's sitting right behind it. American Express, 17.43%. Coca Cola, 11.56%. Bank of America, 9.52%. This is not a tech portfolio. This is a quality business portfolio. And those are two very different things. So the question isn't just, what does Buffett own? The real question is, using invyra's own intelligence framework, do these businesses still make sense at current prices? Let's find out. I'll start with Apple. Position number 1, $57.8 billion, 227 million shares. Let's pull it up in Invyra. The IV engine, Invyra's intrinsic value model, puts Apple's fair value at $221.12. The stock is currently trading at $295.63. That's a 33.7% premium to fair value. The IQ score comes in at 5.3 out of 10, a hold signal. Adequate quality overall, but Invyra flags areas that could improve. The economic moat score is wide, 8.2 out of 10. One of the highest readings on the platform. The ecosystem, hardware, software, services create switching costs that are genuinely difficult to replicate. ROIC is 74.8% against a WACC of just 4.1%. Apple is generating returns nearly 18 times its cost of capital. That's the definition of a value-creating machine. But, and this is the important part, the Prism signal is hold. SMI, which tracks insider and institutional money flow, is at negative 39, bearish. Insiders are net sellers right now. What invyra is showing us is a business with an exceptional moat, trading at a price that already prices in most of that quality. The moat is real. The question is whether the premium is justified. Position 2, American Express, $45.9 billion, 151 million shares. Bigger than Chevron, bigger than Alphabet, second only to Apple in the entire portfolio. Invyra's IV engine puts American Express's fair value at $146.74. The stock is trading at $318.49, a 117% premium to fair value, the widest gap of the 3 positions we're looking at today. IQ score is 6.1 out of 10, the highest of the 3, still a hold. Moat score is still being calculated, but here's the number that matters in the meantime. ROIC is 24.9% against a WACC of 10.8%. American Express is generating more than double its cost of capital. That's a business with genuine structural advantages, network effect, premium brand, customer loyalty, whether or not the Moat score is finalized. Prism signal, hold. Pulse sentiment is at 29. That's in fear territory. The market is nervous about this one short term. The 117% valuation gap is significant. For a long-term holder who's been in this position for decades, the entry price is a very different conversation. For anyone looking at American Express, fresh today, invyra's data is flagging meaningful caution on price. Position 3, Coca Cola, $30.4 billion, 400 million shares. IV engine, fair value, $65.51. Market price, $82.53. Overvalued by 26%, the smallest gap of the three. IQ score, 5.6 out of 10. Moat is narrow at 6.4, defensible advantages, but they require ongoing investment to maintain. Here's where Coca Cola stands apart. Look at the Prism signal. Accumulate. High confidence, that's the strongest trading signal of the three stocks we've looked at today. Direction bullish, quality bullish, confluence bullish. MACD showing a strong bullish crossover. MA trend is a strong uptrend. The technical picture for Coca Cola is the cleanest of Buffett's top three holdings right now. Financial health passes all four of Invyra's checks, the only one of the three to hit that mark. Pulse sentiment at 55, neutral. SMI neutral. Coca Cola is not a growth story. It never was. It's a durability story, and right now, Invyra's signals are the most aligned on this one. Step back and look at all three together. All three are overvalued by Invyra's IV engine. Apple at 33.7%, Coca-Cola at 26%, American Express at 117%. All three are a hold on the IQ signal, and yet Buffett holds all three in size, long term. What that tells you is that Buffett is not optimizing for entry price on these positions. He's optimizing for business permanence. These are businesses he believes will still be compounding cash flow in 20 years. And his cost basis from decades ago makes the current valuation a very different calculation. That's the lens Invyra gives you. Not just what to think about a stock, but why the numbers look the way they do, and what that means for different kinds of investors. Here's where I land on this. Buffett's moves get overanalyzed and understood at the same time. People see the valuation gaps and assume the positions are mistakes. They're not looking at the same timeline. What they're missing is the framework underneath. It's never about the ticker. It's always about the business quality and the price you're paying for it. That's exactly what Invyra was built to surface. When I look at this portfolio through the IV engine and the IQ score, the businesses with the highest Moat scores are, not coincidentally, also Buffett's largest, longest held positions. That alignment between what the data shows and what one of the greatest investors ever has done in practice, that's worth paying attention to. Of the three positions we looked at today, Coca Cola has the most aligned signal set right now. Narrow Moat, yes, but Prism. Accumulated high confidence, financial health passing all four checks, and the smallest valuation gap of the three. That's what Invyra's data is pointing to. If you want to do exactly what I just did, track Buffett, Ackman, Tepper, or any 13F filing institution. Invyra's Investor Elite Tracker is live right now. No credit card, no subscription. Just go to invyra.thinkrium.ai, click Investors, and pull up any portfolio. The link is in the description. I'll see you in the next one.